Hello, my name is Lynn and welcome to the Group 3 presentation, Bibica Financial Analysis. So let's start with the introduction about the Bibica. Bibica Confectionery Choice Stock Corporation or Bibica Corporation in short was founded in 1999, headquartered in Dong Nai Province, Vietnam at this time. After 22 years, Bibica has expanded from only one factory to three in the country, and besides, Bibica is certified to export its product to other high-standard markets such as the United States, Singapore, or Thailand, etc. With the vision of becoming the leading confectionery corporation in Vietnam market, Bibica commits to satisfy customers in terms of health and their preference by supplying a variety of nutritional and food safety products in attractive packaging. Bibica Independent Audit Firm is Ernst& Young Global Limited. Their list share on the Hanoi Stock Exchange and their symbolic icon are BBC. The company primary lines of business contain production and distribution of cake, candy, spice, and nut, production of packaging, export of confectionery product and agricultural product, import of equipment, material, technology. Let's look at memberships of the company board of directors. Mr. Trương Phú Chiến selected as chairman of the BOD. Mr. Võ Ngọc Thành selected as BOD member. Mr. Nguyễn Khắc Hải selected as BOD member. Mr. Kim Jun Jong selected as BOD member, and Mr. Chung Woo Lee selected as BOD member.
Hi, my name is Lynn, and this part is about balances and income statement. The financial performance of Bibica company is being analyzed by using the balances and income statement preferred by the audited consolidated financial statement of Bibica from 2018 to 2020. For the balances, to illustrate the proportion change over 3 years period, the company blue common sign analysis total assets and total results are used as common base feature. As it can be seen from the table, the amount of total assets reached a peak in 2019 at 1,570 billion VND, while the number of it was 1,254 billion VND in 2018, and then in 2020 it was 1,543 billion VND. Furthermore, the company asset structure changed in the direction of reducing the current assets decline from 59.4% in 2018 decreased to 53.6%, and in 2020 it's only 46.5%. Oppositely, the long-term assets compared to total assets in 2018 account for 40.6%, increased to 46.4% in 2019, and 1 year later it increased to 53.5%. In addition, there was a fluctuation in Bibica Corporation results from 2018 to 2020. The company current liability make up 337 billion VND in 2018 and increased to 567 billion VND, and then it dropped to 440 billion VND in 2020. For the owner equity in 2018 constitute the majority 918 billion VND in 2018. In the next year, owner equity increased to 104 billion VND in 2019, and then it's increased to 1,096 billion VND in 2020. Overall, since the owner equity comprises a large proportion of total results each year, Bibica Corporation has a high degree of independence towards creditor and financial autonomy. And next, Hải Company is a potential competitor with Bibica Company in the confectionery industry in Vietnam. Therefore, a comparison between two companies is very necessary and practical. In general, total assets and total results of Hải Company increase, but is still lower than the amount of Bibica Company. In total assets, contrary to Bibica Company, Hải Company mainly focus on current assets. We can see that in the table, the current assets of Hải Company is much higher than the long-term assets. And for the total result, despite the amount of current liabilities of both companies are the same in 3 years, the long-term liability of Bibica Company are lower than the Hải Company. We can see that in the table. The long term is just ranging from 16 to 18, but in the long term of Hải is from 172 to 323 billion VND. Additionally, the Bibica owner equity in 2018 was 918 billion VND, while Hải was valued at 393 billion VND. This means that the owner equity of Bibica Corporation was about 2.3 times higher than the owner equity of Hải Corporation, and is continued to happen in the next 2 years later. And the next is about income statement.
For income statement, generally, there was an upward trend in the amount of Hải Company revenue from sale of goods in the year of 2018, 2019, and 2020, but was still lower than the amount of Bibica Company in the same period. In 2018, the sale of goods and net revenue of Bibica Company is 1,422 billion Vietnam dong, larger than Hải which is only 982 billion Vietnam dong. 1 year later, both companies rose slightly, but in 2020, Bibica net revenue was 190 billion Vietnam dong, weaker than its competitor. Moreover, this fluctuation in 3 years for the two companies was similar for cost of goods sold, with Bibica peaked at 1,020 billion Vietnam dong in 2019 and Hải peaked at 1,119 billion Vietnam dong in 2020. Regarding earnings per share from the end of 2018 to the end of 2020, Bibica Company earnings per share were more than nearly 2.3 to 2.6 times of Hải. It is spread through the difference in the net profit after tax of both companies in the same period, in which Bibica ranging from 95 billion Vietnam dong to 109.5 billion Vietnam dong, whereas Hải just ranging from 39 billion Vietnam dong to 42 billion Vietnam dong.
Hello, my name is Lee. Continue to my teammate, I will present to you about the ratio analysis. Ratio analysis is a quantitative procedure for determining a company operation efficiency by analyzing its financial records and statement. The use of ratio analysis to aid in the understanding of stock fundamentals is extremely significant, because ratio analysis will not only offer a management or investor a sense of how healthy the company is, but will also provide them with valuable information into how the company operates. The six financial ratios that we use to analyze Bibica financial health are short-term solvency, long-term solvency, asset management, profitability ratio, and market value ratio. And I will in charge of presenting the first ratio, that is liquidity ratio. Liquidity ratio are an important class of financial metrics used to determine a company's ability to pay off its short-term obligation and its margin of safety. Liquidity ratio analysis can be divided into three categories: current ratio, quick ratio, and cash ratio. It can be seen in the table above. The current ratio of Bibica company remain a high number, greater than 1, which indicate that Bibica company have the financial resource to remain sovereign in the short term. And based on the present current ratio change in the chart, we can see that the trend for Bibica current ratio is positive, suggesting that Bibica may be making significant headway toward a healthier current ratio. Bibica quick ratio is also a strong figure, indicate that the firm can quickly pay down its current creditor. And the cash ratio of Bibica company is less than 1. There are more current obligations than cash, mean that insufficient cash on hand exists to pay off short-term debt. And when bringing into comparison with Bibica industry peer, the three liquidity ratio of Bibica is in line compared to its peer group, specifically high company, and is generally considered acceptable. So that's the end of my part, and my friend will continue me to present about the long-term solvency.
So besides the short-term solvency, the assessment of long-term solvency ratio also plays an essential role in analyzing Bibica's financial performance. Particularly, the highest growth of Bibica's total debt ratio was probably in 2019 at 56.4%. However, it was twice lower than that highest of Hi-Hat company at 62.5% in 2019. Compared to its competitor, Bibica had generally a more balanced percentage of total debt ratio. In the last 3 years, Bibica's overall percentage of debt to equity ratio indicated that the company was leveraging more of its debt than total equity. The figure of Bibica's debt to equity had the similar pattern of growth as total debt ratio, whereas the rate of debt to equity ratio grew significantly from 2018 to 2019 at 36.7% and 56.4% respectively. However, Bibica's highest debt to equity ratio was nowhere near that of Hi-Hat company at 166.5% in 2019. It can also be noticed from the table that the figure of Bibica's equity multiplier was high in 3 years and hit the highest point at 156.4%. However, the highest ratio of Bibica was about 2 times lower than that of Hi-Hat company, 156.4% and 266.5% respectively. Bibica's low equity multiplier implies that the corporation relied less on debt compared to Hi-Hat company. In terms of times interest earned ratio, Bibica seemed to prove the strong capability to pay for the interest expense, whereas the percentage of 2020 was merely 8 times larger than the rate of Hi-Hat company, 24.21 and 2.83 respectively. Similarly, Bibica also had a high cash coverage percentage in 2020, about 38.29 times, which was completely predominant to that of its competitor in 2020 at 3.65. These indicators imply that the amount of Bibica's available capital was larger than Hi-Hat, which meant that Bibica was more likely to cover its interest expense in 2020.
And next, I will talk about the asset management turnover. Firstly, I will give The definition, the turnover ratio or turnover rate is the percentage of a mutual fund or other portfolio holdings that have been replaced in a given year, which is one of the most important elements to determine the financial health of a company. It concludes 5 elements: inventory turnover, day sales in inventory, receivable turnover, day sales and receivable, and total asset turnover. Firstly, going to the first part, inventory turnover and day sales in inventory. The inventory turnover ratio of Bibica Corporation experienced a significant decrease from 9.85 times to 7.05 times from a 2018 to 2020 period. This means that Bibica was not converting its money into cash as quickly as before. And from the beginning of the period, Bibica's day sales in inventory grew rapidly from 37 days to 50 days. It means that Bibica is not properly managing its inventory, or that it has inventory that is difficult to sell. And going to the second part, receivable turnover and day sales in receivables. From 2018 to 2020, Bibica showed a magnificent reduction of receivable turnover from 10 to 3.52 times, which means Bibica is struggling with more delinquent clients. Also, the day sales and receivable of Bibica experienced a significant increase from 36 days to nearly 104 days. It means that Bibica is gradually difficult to take credit sales to be converted into cash, or takes a company longer to collect its account receivable. And lastly, the total asset turnover. Looking at the chart, Bibica's total asset turnover continues to decrease from 1.14 to 0.8, which indicates Bibica is not efficiently using its asset to generate sales. And next, going to the next point, profitability ratio. The definition first. Profitability ratios can be compared with efficiency ratios, which consider how well a company uses its assets internally to generate income. Firstly, the profit margin. From the period given, Bibica profit margin fluctuated from the first year of the period, but remained steadily from the whole period. However, this figure is too small, 7%, which indicate Bibica used an ineffective cost structure and of poor pricing strategies. Next, the ROA, return on assets. Return on assets of Bibica experienced a significant downward change from 8.73% to 6.26%. A falling ROA indicates that Bibica may have overinvested in assets that have failed to produce revenue growth, aside Bibica was facing troubles. Next, ROE, return on equity. Return on equity of Bibica decreased magnificently from more than 10% to 8%. This indicates that Bibica was not very efficient in generating profit when Bibica had a low ROE, less than 10% in a long period of time. Declining ROA suggests Bibica is becoming less efficient at creating profits and increasing shareholder value. And lastly, the EBITDA margin. Lastly, compared to the EBITDA margin, Bibica margin was fluctuated but showed a small increase in the last year given period, 9.2% to 10%. A relatively high EBITDA margin means that the Bibica earnings are stable. And thank you for listening my part. Next, my friends will share about the market value ratio.
Now to the final group of measures, market value ratio gives an overview of the economic health of publicly traded corporation through evaluating companies' stock value. It is observed that Bibica's trailing EPS reached its peak at 6.75 in 2018, which nearly doubled the highest of Hai company at 2.56. Throughout 3 years, there was a slight fluctuation in Bibica's trailing EPS. However, compared to the overall figure of Hai, Bibica might have achieved greater profitability. Regarding price-earning ratio, it is noticeable that Bibica's price-earning ratios within 3 years maintain at an acceptable rate and hit the highest point at 11.67 in 2020. However, Bibica's peak value was completely dominated by that of Hi-Hat Company in 2019 at 51.81.
Hello, my name is Lynn, and now we'll move to the conclusion finally. So, in general, Bibica weak ratio in 3 years is a strong finger, which indicate that the company assets might turn into cash rapidly and the proportion of cash in the company is considered to be positive. However, Bibica efficiency slowed down in the given years, which led to an increase in the company's storage, insurance, and maintenance costs. The long-term solvency assessment above show that Bibica total debt ratio is considered low, which led to the company becoming a safe choice for all small investors to invest money in. So that's all of our presentation. Thank you for your listening.